Hello traders. So today we are going to be talking about a sensitive topic that a lot of traders get to ask, and that question is the best time frame to trade the forex market. We all know that forex market has from the 1 minute down to the monthly time frame. However, people are looking for the best time frame. There's this concept of the holy grail. Once I can identify the best time frame, I'll always have good trades. Have you ever thought that if you could discover in some way the best time frame to trade, then you'll be making money? Then why are people not making money? Why are people not making money? So the problem is you have the question wrong. The question itself is wrong. It's beyond having to know the best time frame. Forex is about understanding the psychology of the market. You have to see the totality of the market. You have to look at it from the higher time frame down to the lower time frame. Why? Because across the time frame from 1 minute to the monthly, you're going to find something they call market structure. Structural formations are everywhere. You can find it on double bottom, double top, on trend lines. You can just go on and just forget about the names. The most important thing, these structures are everywhere. You can see my chart right here. When I switch over to a line chart, you can easily, and I shrink this. Let me shrink my chart. You can see the movement. You can find structures all across the market, right? I can easily spot structures here. You can find structures all across the market. And there's another one here, okay? And I can just keep going on and on. There's another one here because of this little upward movement. And there is okay, let's see. There is another one here. Sorry about that. Another one here. So guys, it is beyond looking for the best time frame. So look at the market in totality so that you'll be able to make better decisions, make better judgment on the best possible time frame to use for your entry, right? So let me show you an example. I'm going to show you an example of a more recent trend that happened on GPB JPY. Okay, when you look at the market, you can easily tell that the market is on an uptrend. Okay, this is a daily chart. Then let me take it even way to a weekly chart. You're going to see that the market for a while has been bullish, right? The market is long, really long. So when you go to a lower time frame, you are looking at entering for a long position. So what you should do as a trader is you're going to spot the key levels on the lower side. The concept of buy low, sell high. Okay, you're buying low, the market is bullish, you're selling high when the market is bearish. So when the market reverses back to a key level zone, you sell again. Likewise, when it's bullish. So what we're going to do is, since we know the market is an uptrend, this is the previous week, previous market, you look for a key level zone. Okay, so let me show you. This is the movement right there, upward, and there was a retracement. So I'm going to look for a key level zone right here. Key level zone should be around here. Talk about key level in my other video, so you can go watch it. I'm not going to talk about it. So this is our key level. That's why you see this consultation on the smaller time frame. You find it consultation zone right here. See what I talked about, no best time. So you are now looking out for buy opportunities, right? So I'm going to go to lower time. I'm going to show you something what happened right here. Right here, we're looking out for a place to buy, and at this zone, we could not really see, what we are looking for to give us a buy entry. Okay, so what are we going to do? Let's see our 1 hour. Oh, you can see that now, right? You can see a trend line formation, and you can see a breakout, and this happened here in 1 hour after the breakout and tests right here. So judging from this, you cannot conclude and then say, 1 hour suddenly is the best time frame. It's because 1 hour was able to give you structural formation. Sometimes these structural formations you are looking at for could appear on the 4 hours. It could even appear on 30 minutes, and sometimes I've really seen a good setup on 30 minutes. However, what you should be looking at that is you want to identify the dominant trend first, so you take advantage on the lower time. You see, all these, they all work together. Top down analysis, your engulfing, the candles, and trend line, they all work together. So just one more thing. There's a more recent. Okay, yeah, I love this. You can see right here. This is a bullish move. This happened in weeks. Yeah, 1, 2, 3. This 3 weeks happened in 3 weeks. So take it out, and there was a retracement down to the key level zone. Right here. So now we've established that. Let's check back on that. So we are looking out for buy opportunity. So at this point, of course, lower time frame, 1 hour, 30 minutes, maybe 15 minutes, just depending on what you see, right? So we are looking out for structural formations. We are looking out for engulfing candles. We are looking out for engulfing candles. We can as well call that a demand zone based on what we have on our chart. So I'm going to go to my 1 hour on our key level and see that the market has been bearish, but the dominant trend is bullish. So we're looking at for buy. At this level, when you look at change to a line chart, you can't really find a structure, right? So I'll go to my 30 minutes. Let's see if we can find a structure. Okay, not bad. You can put something here, right? I hope you can see these two edges. I want to call it that. And you can see like a double bottom, or you can call it W formation. You see what I'm talking about? And it's forming on the zone we are looking at. Then the interesting thing is when you change this to a candlestick, you're going to find an engulfing candle right here. You can see it right in the spot there for you, an engulfing candle, which you can probably call it maybe a demand because of the zone, maybe. But we know what we're looking at. We found the structure, we found formation. So at this point, as a trader, who knows what it's doing? It is 15 minutes, this is structural formation. So at this point, I can decide to, place my buy. And at this point, I'm pretty early in the market. I'm not too early and I'm not late. So, and I'm looking at 27 pips for stop loss, and really tight stop loss, and you can see how far the market went. All the way. So guys, this is how to look out for the best time frame. You have to see beyond just having an answer. Oh, the best time frame is 15 minutes, it's 1 hour. No, it's way beyond that. Look at the totality of the market. Market structures are always in formation, but you do not know exactly the time frame once the structure is formed and completed. So guys, take advantage of this. I don't want to go more into other pairs, because you're going to see all across. If you watch all my videos and most of my videos, you're going to see a repetition of what I said about structures and get to understand. You're not going to be where you used to be if you're a beginner. So guys, I will keep posting out good content there for you. Do well to like, share, and subscribe. So I'll see you in the next video. Cheers.